Hello everyone. Today we will learn asset elements in accounting elements. In our daily work, we have to deal with the accounting business every day, such as the water and electricity used at work every day, the purchased goods, office supplies, or the products sold, and so on, all of which need to be recorded in accounting. How are these complex businesses classified and recorded in accounting? Are there any classification standards and special technical methods? Yes. Next, let's learn the basic contents of accounting elements together. Today, we will focus on what is an asset. We know that accounting has 6 major elements. What are they? Yes, they are assets, liabilities, owner's equity, revenue, expenses, and profits. So, what are assets? Assets refer to resources that are formed by past transactions or events, owned or controlled by the enterprise, and are expected to bring economic benefits to the enterprise. 2. Characteristics of asset. Assets must have the following for features. 1. The asset must have been created by a past transaction or event of the enterprise, including purchase, production, construction, or other event. If it is a transaction or event expected to occur in the future, it cannot form an asset. For example, if a company buys a piece of machinery today, it has already been purchased, so it is an asset of the company. However, if the company simply plans to buy 10 cars tomorrow or next month, this is a transaction or event that is expected to occur in the future, and it cannot be considered an asset of the company now. The second feature, assets must be economic resources owned or actually controlled by the enterprise. The term owned or controlled by the enterprise here means that the enterprise has the ownership of the resource, or although it does not have the ownership of the resource, the resource can be controlled by the enterprise. That is to say, the ownership and risk of the assets have entered the enterprise, including the rights that have been obtained and can be exercised according to law. For example, although accounts receivable do not have a physical form, you can recover this amount according to law, so it should be recognized as an asset of the enterprise. For another example, although that ownership of large equipment leased by an enterprise does not belong to the enterprise, it is an economic resource actually controlled by the enterprise and can continuously create profits for the enterprise. Therefore, it should also be recognized as the enterprise's assets. The possible consequences of future events that have not yet occurred cannot be recognized as assets. For example, the company is in the process of filing a lawsuit and is likely to win. If it wins, it will receive a compensation of 1 million, but this 1 million cannot be considered an asset now. The third feature, assets must be able to generate economic benefits for the enterprise. As a resource, an asset is expected to bring benefits to the enterprise. That is, it has the potential to directly or indirectly cause cash and cash equivalents to flow into the enterprise. Therefore, as an economic resource, an asset can independently or in combination with other assets, and has that ability to bring economic benefits to the enterprise in the future. If an asset cannot bring economic benefits to the enterprise, it cannot be recognized as an asset. This is an important feature of an asset. The fourth feature, assets must be measurable in currency. Accounting is based on currency as the main measurement scale. Economic resources that cannot be measured in currency are difficult to confirm and measure their value, and therefore cannot be confirmed as corporate assets. The most typical example is talent. Human resources are the most important resource of an enterprise. Especially in today's rapidly developing science and technology, the quality of talent determines the quality of an enterprise's products, and even the fate of the enterprise. It can be said that talent is the largest and most fundamental hardware of an enterprise. However, since people cannot be priced or measured by monetary terms, you cannot say that the chairman is worth millions while the workers are only worth tens of thousands. Right. Therefore, people are not assets of a company. They cannot be recorded on the books, and their value cannot be estimated. People do not belong to the category of assets. People are priceless. Only those that can be measured in currency can be recognized as corporate assets. Okay, let's review the main content of this lesson. 1. Concept of assets. Assets refer to resources that are formed by past transactions or events, owned or controlled by the enterprise, and are expected to bring economic benefits to the enterprise. 2. For a feature of assets. 1. Asset must have been created by a past transaction or event of the enterprise. 2. Assets must be economic resources owned or actually controlled by the enterprise. 3. Assets must have the ability to bring economic benefits to the enterprise. 4. Assets must be measurable in currency. Please review carefully after you go back. Now let's arrange some after-class review questions. 1. What is an asset? What are the features of assets? 2. How to classify assets? Okay, that's all for today's class. Thank you all.